Business and technology solutions provider EOH says full-year diluted headline earnings per share jumped over 30%. That's as the group's revenue advanced by 40%. Earlier, I spoke to John King, the financial director of EOH, about those numbers.
Look, our customers are also seeing some uptake. We've seen that they're starting to invest a lot more in IT, but we are seeing that clients are starting to outsource their IT. You know, the complexity of both infrastructure, IT infrastructure, as well as applications. Clients are realizing that it's very difficult to do it themselves, and they're starting to outsource that to companies like ourselves.
Have you seen a noticeable shift in business over the past years as we came out of recession? Are businesses starting to spend a little bit more on infrastructure and on software?
There has been a shift. It's not huge, but there has been a shift. We've seen an uptake in the infrastructure business. We actually acquired a business during the course of the year, you may know, Glacier Consulting, which is an infrastructure. So we've seen a big for ourselves, a big increase in infrastructure. But overall, we see that clients are starting to spend more money, but spend a lot more money on services, not really new software, but services around, surrounding that software and infrastructure.
And how about maintenance? Are they still spending a lot more on maintenance rather than on new infrastructure?
Absolutely. I think all clients are trying to sweat the assets, whether they're the hardware itself, which they did sweat quite significantly over the last few years, and that's why we're seeing an uptake in actual new spend on hardware. But in applications, a lot of the big applications, a lot of the big software packages that are out there, clients are now starting to utilize more and more of the functionality, and that's where we come in.
Well, that 34% growth in your profits for the year, how much of that was organic and how much came from acquisitions? You already mentioned Glacier Consulting. You made a number of smaller acquisitions as well.
If you look at the overall 36%, about probably 16% of that 36 would be organic, and 20% as a result of acquisitions. So probably a 45-55% split overall. But as part of our growth strategy, we grow. Our strategy is to grow both organically and through acquisitions.
And do you have more acquisitions planned for the current year? What sort of acquisitions would you be looking at?
Look, we're always on the lookout, and that's why we obviously try and have a very healthy cash position in terms of acquisitions. We want to grow our business in terms of annuity revenue, and infrastructure maintenance services, application maintenance services is obviously what we're looking at.
And of course, annuity revenue does give you that smooth profit growth going forward as well, doesn't it?
Absolutely. At the moment, we probably sit at about 40%, just over 40% of our business is annuity revenue, which is quite high for in an IT sector. We'd like to get that number closer to 50.
Another small acquisition you made, which caught my interest, Abacus Recruitment, a recruitment agency. How does that fit into the business?
Well, if you recall, a couple of years ago, we acquired a business called Harfeld, which is in the contract management business, where there's about 3,000 contractors that they manage those contractors, and it's very useful having access to people in the IT industry. They have a very good recruitment process and a very good and healthy database. So that helps us as well if you're trying to staff our projects. So it complements our business, and at the same time we make money out of it.
So you're using it for staffing other businesses outside of your company as well?
Yes.
I mean, just looking at the split, I mean, you had services net profits almost doubling to 102 million, and software under a bit of pressure over the year. So revenue was a bit higher, but your profits came under pressure. Why on the software side? Well,
there's two reasons for that. First of all, there hasn't been as many new software sales. As I mentioned earlier, people are sweating the assets a whole lot more, the applications. And secondly, there's a squeeze on margins from the vendors themselves. The vendors are taking a greater share of the revenue, of the profit in terms of software sales. So it's a double whammy. Fewer software sales and tighter margins from the vendors.
Infrastructure also doing well, coming off a lower base than the others, though. Would you expect to keep on growing the infrastructure contribution to earnings?
It will continue to grow. Now, I think proportionately it won't be much more than about 25%, but it's very good for us to have infrastructure, because that leads on to the infrastructure managed services, which is really what we're after. So we have the actual sales themselves of hardware, and then following on from that, the maintenance portion of that, the monitoring of those particular, of the hardware itself.
How are you seeing competition in the sector at this stage, and what's that doing to your margins?
Look, we're quite sticky when it comes to margins. You'll see our margins have not declined. In fact, they're growing. So we take on good business. We don't chase top line. We only chase bottom line. We look at the bottom line. We're still a small company in terms of the overall market share. We don't butt heads too often with our competitors, but we are becoming a bigger player. So we're starting to grow up. It hasn't had a major impact on us at all.
Going into the current year, what's your focus going to be on this year? You do mention a few things in the commentary, such as increasing your managed services business, expanding your business process automation, storage, virtualization, things like that. What else is going to be in focus this year?
I think that those are the main focus areas. Obviously, we're looking to also grow into the public sector. We don't do much work in the public sector at the moment. In the past, it was mainly consulting. We're now selling hardware into the public sector. We're doing applications, a lot of the big metros. So we're wanting to grow the government side of our business. It won't be huge, I don't think, but that's the other focus area.
And what sorts of opportunities do you see in the public sector?
I know there are a number. The overall spend from government's perspective has decreased. 2-3 years ago, 40-50% of the total IT spend in the country came from government. Now it's about 15%. So there's a lot less spend. But because we've been so small in that particular space, there is a lot of room for growth. So it's infrastructure and applications primarily.